Hey again, everybody. This is Eddie. I'm here to check out the successive hours to trade from yesterday as I had analyzed Next Era Energy using an algorithm. Algorithms are simply equations with user inputs that produce an output. So algorithms basically are like an algebra equation. X plus Y equals Z. So we're calculating for Z, for instance, we want to know um, how many people over the age of 21 went to the movies this weekend. You might say, first I'll take the number of tickets sold. I'll take a demographic of the number of people in that community that are over 21, and that's it. Or, let's say retirement age, the number of people that are over the age of 65 that went to the movies this weekend. That's effectively how you create an algorithm. I'm going to attempt to compare the percentage of moviegoers that went to the movies this week as opposed to last week. So if people over the age of 50 went to the movies more this weekend than last weekend, the conclusion is this weekend there were more popular movies out. Okay, so the marketing was good, et cetera, et cetera. But this is a general background into what algorithms do. In this case, I looked at Next Era Energy as an example because it's a major energy stock on my watch list. You should choose whatever watch list you want. You could send me the information. I can do the research and tell you. This is the chart that I would use. So I looked over the Next Era chart for the past 2 or 3 weeks. I looked at the moving averages over half days, and I designed an algorithm that shows me when the stock has changed direction, not by looking at a series of bar charts, but rather looking at a series of mathematical computations. So I don't need a chart, I just need data. All right, so let's review the methodology that we introduced yesterday. So yesterday, March 6th, we came on live at 3 o'clock Eastern Time. We were going over a algorithm trade signal. Signal was generated when the opening price of a stock at a given hour, in this case it was 2:30 or so in the afternoon, generated a buy signal. Now, a buy signal suggests that momentum is going in the positive direction after it had been steady or going down. Looking at this chart will avail itself to the methodology generally. So you'll see green and red bars. It's a typical table. The bars will show the price at the beginning of an hour and the end of an hour. If a bar is red, it means that the ending price was below the opening price. The longer the whole bar or the body of the bar, the greater the move down. So you might consider, how do I take the average of a bar? What was the average move per hour? Those are little statistics that you can do on your own and people will use to calculate various things. I, generally speaking, zoom out to the hourly level to get a general idea of what's going on over a couple of days. And we determined yesterday that although we were able to find a trend, meaning we identified when the green bar turned red toward the upper left, we were able to notice that it changed a couple of times because in the next 4 hours it went from red to green and then it went from green to red again. So with experience, you'll learn that once you see a change of direction twice in a day, it means there is some uncertainty. And in this case, with experience, traders will tell you if there's a low or high, meaning, that change in direction the second time from positive to negative came beneath the first change of direction, positive, negative, stock has begun turning in the down direction. And usually once you get to that second one, people assume that it's a strong move. Sometimes they call them measured moves. They'll suggest that the move from the first to the second change in direction will be equaled. In this case, we noticed that at that momentum change. Second time around, it was a good idea to watch in the down direction, which we did. And then uh, toward the end of the day yesterday, we noticed the price start to stabilize. Didn't seem to be going down too much more. The momentum was slowing down because it had changed direction a couple of times, and I was uh, you know remarking on this change of direction which has occurred toward the end of the day yesterday. All right, so the exact methodology is take the first four candles, take the average generally of those prices, compare it to the next four generally, and you see obviously the average is going down. Compare it to the third, and you see the average is going down by less, so momentum is less. And then by the fourth, that fourth segment of 4 hours, you'll say, well, the average is really kind of about the same as the previous one. So what's happening here? Like maybe buyers and sellers have decided to stop trading the stock. They're not sure what they want to do. Generally speaking, the desire to sell the stock has stopped. And in a market economy where this good is exchanged every day, it would suggest that the number of buyers and sellers is about equal, that it's going to be the same for a while until the averages creep up. So the averages crept up toward the end of the day yesterday. So I said to myself, it's time to consider buying the stock. So we looked at the stock today, which is in the you know basically right there at the right side of the chart, and we'll notice that the green candlestick at the beginning of the day took the price from where it closed yesterday to a few percentage points above where it closed 2 days ago. So we basically wiped out a couple of days of trading in the positive direction. My target price was reached by 10:30, 11 in the morning. I sold for a profit and decided to share this information with you as an example of why using an algorithm and focusing on one or two stocks a week is better than trying to analyze the entire market. While in some circumstances this methodology is better than in others, and I've been trading for a few years, I thought I'd specify one, chart pattern which clearly suggests that stocks like to trade in ranges. So if you look at the top left and you look at the bottom right, as the stock wants to tease you by thinking it's going to go down continuously, but when you actually do the math, measure those bars using such things as the average during a 4 hour period, the high and low of a 4 hour period, and putting them all together and mixing and mashing it, across a rolling average, you'll notice the math does not lie. I can tell you where the stock is generally headed the next day or the next hour, and if the momentum suddenly, goes your way, that's when a slight percentage change in the stock can resolve to many hundreds of dollars of success by trading an option, which is not the subject of this course. I'll share my link to the subject of options trading below at a later date. But thanks for watching. As you can see, considerable gains were met. Now let's go on to describe the analysis. So thus far, I've shown you what a chart will look like, what a candlestick is. If it's red, the price direction was negative during that hour. In this case, we're looking at a daily chart. So instead of looking at, various hours over a couple days, I'm looking at various days over a few months. What is intriguing really is that on a micro level, the activity and fluidity resembles what it does on a larger scale. So if I was trading over a larger scale and setting option, futures, weeks and months in advance, the same is true. Like I can generally tell you where a stock is going a few weeks and months down the road by looking at a larger, broader picture. What I've added in this particular case at the bottom are additional bars that show the activity on a stock. So the activity here was high, the activity here was high, the activity here and here was high. So what I did is I drew a vertical line to show and analyze what those stocks, bars are doing. And guess what? Lo and behold, the bigger candles are affiliated with the higher volumes. Now, let's start with that. Let's look from left to right. Look at this bar there. The line was drawn roughly in the right area, but I didn't want to write over it. So like December 20th, 2024, volume was at its highest in this range of months of December 2024 to the present. So after a long decline, 1, 2, 3, 4, 5, yeah, we'll just call it 20 trading days or 4 weeks, the stock uh, changed in direction. Okay. And not only did it change in direction, but it made a dramatic change of direction. So right there, a trader will say, buyers are most interested when the value of a stock is highest, meaning generally their return on investment will be higher, meaning the likelihood of the stock going a lot further down at this point in price didn't seem reasonable. It seemed most people were willing to pay the price um, there of about, looks like 60-ish, $60. Okay, $60 is a high value price area. Let's go on to another high uh, traded, bar. Again, the biggest bar, okay, on this chart is there on January 24th. It is by far the biggest candlestick of them all. It's about the same volume that we saw as the largest volume during this period. And you'll notice that the demand for this stock was huge, and it was huge at about the 58 price. So somehow the stock dropped below 60 and so quickly that buyers became intrigued. So not only were as many buyers intrigued at 58 as 60, but even more. In theory, that means that people are paying attention to the value price again. Um, and the conclusion that you can draw from this is pretty intriguing. We know that the price action between 58 and $60 is interesting. There will be far more buyers than sellers at that price range. Again, you'll notice as we move this time to February 7th or so, the price did bounce off of that 58 price. But you might say there was a little bit more fear in the market, and people decided maybe this price isn't going to hold, and let's wait and see. So not only were they proved wrong because the price bounced to 60, but um, but eventually you'll notice that sellers got intrigued when the price got down a little below 58. Once it got down a little bit of below 58, you'll notice the price went right back up. Okay, right back up to that range that we had said before that is of interest. So once that price stays in that range of interest, we know that that stock has nowhere to go but up. Again, we were examining today what amounts to volume, and then we were looking at the strength or length of a bar. But more importantly, what we're looking at is designing a chart with ranges. We identified this range of 72 to 70 as being, very interesting. I may have called it 60. It's because for whatever reason my chart uh, was obfuscating the situation a little bit. So I'm trying to show you here. The price of interest is actually 70. Okay, I meant to say 70, not 60. But the second view here shows me that volume. So we says to ourselves, okay, there's a lot of interest in the stock at 70. Okay, a lot of interest at the stock at 70, and a lot of interest with our biggest bar at that price of 67. Okay, so the stock isn't going to go much below 67. All right, so we look at the size of bars, and that's pretty much it. We noticed that buyers got interested, uh, in that range, and I hope you enjoyed the video. Our successful trade happened when we noticed that the average, again, when it's hanging around in a range, that average really matters because a slight change in average um, is what you're looking for. So in this case, it appeared to go up a little bit, which was a fake out. It came down and then it launched. These are the patterns that make people rich. These are the patterns that you look for. Kind of like a double pump. So the stock's going up. It's kind of like a basketball player, going up. The defense goes up, but he doesn't shoot. Next time, he brings the ball down, dribbles a little bit. This time he sneaks in a huge thrust over and above the bucket, which is just a couple days after it faked you out. It did a head shake. It said, let's go up, and then it came down. Feel free to look at these charts at your will. Let's show another example of a head fake. Head fake is where the place of interest, it goes up pretty substantially, then it comes down, and it shoots up above with that massive candle we looked at earlier. Okay. You might call the recent move a triple pump because it goes up, fakes out, comes back up, slightly up, didn't shoot, then it really did shoot up. So again, these are real little charts that matter. The vertical and horizontal charts show zones. So we know the zone of interest, great interest, 70, 72. We're at the top of interest right now. What we as traders are trying to do is determine, is this chart going to continue to trade in that range? Because if it is, we'll make money all day long. We're immediately putting in a trade that it's going to go down before it goes up. And then lastly, because you've been such good listeners, I'm going to teach you one other little trick that really matters. We've identified changes in direction. We've identified, okay, right here, we know that something in our data has proven out that the averages have changed. Same thing here, same thing here, same thing here. What we aren't able to determine too much is how long that lasts. Like it goes down here a little bit, goes down here a lot longer, goes down here a little bit, goes down here a lot longer. And again, the head fakes, those are hard to predict. What you can see through the data is when this little red line, which is containing an average, okay, in this case, it's the short-term average, okay. The short-term average is 5 periods, so it's 5 days of trading. When that turns up, every single time, the first time it does here, it turns up a little bit, not much. The price went from down here to up here. Okay, once that change of direction happens, you got to start thinking there's some head fakes coming. But this larger change in direction on that five day chart, uh, some people prefer to use, like, I don't know, 10-day. I use the 5. Boom, that really was a significant change. As soon as that started heading up at that degree, you know that stock's heading up. So again, it's a little bit of a head fake. You come back down here, there's a little head fake because it's a small line. Okay, a little bit of a head fake. But right here, you can tell it's starting to go up. And so that's another thing you want to look at is right now that stock is in a range. I wouldn't bet that it's going up higher until you start seeing a more defined increase in that average. Okay? I hope you liked the video. Hit smash like and subscribe, and you'll get your free options trading course. Thank you. Thank you so much.